copy trade. Copy trade. Copy trade. Copy Trade. We Copy Trade.
Good day to everyone joining us from around the world. Whether you are just waking up, midway through your trading sessions, or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we are truly pleasures to have you here with us for this global live stream sessions. My name is Hayden, and I will be guiding you through the exciting 2 hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the engine's room for one of the most fast growing and forward thinking funded trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have helped shape what WeMasterTrade represent today: skilled traders, mentors, and role models within our community. First, let me introduce the ever composed, always insightful Ralph. Welcome, Ralph.
Thank you so much, Hayden. Hello, everyone, and thank you for spending your time with us.
Managing money
Looking
becomes
forward to today's section. There's so much to cover, not just about trading strategies or rules, but about the full ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund traders; it builds traders.
Absolutely. And next to her is someone who brings shape analysis and clarity to every chart and conversations. She's strategic, she's safe, and she's a real force in our trading space. Please welcome Helen.
Thank you, Hayden, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me more about today is we're going to unpack everything, not just what WeMasterTrade offer, but how trader can truly take advantage of each part of our system, from packages to promotion, scaling, and long-term profit sharing. If you ever have a question and even doubt, today is the day to ask them.
And that's exactly what we are here for. Whether you are brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you the full picture, not just the highlight reel. Over the course of this session, we are going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we are doing things differently from traditional brokers or pro firms. Now, I want to be clear. This isn't about sale. This is about understanding. We want you to know what you are signing up for, what kind of structure what supports your journey, and how you can use that structure to not just succeed but scale.
And speaking of a structure, we will begin by sharing the story behind WeMasterTrade, how we work from at a funding project, not broker, with a very important distinction. Unlike broker who profit from values or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in trader, cover the risk for them and share profits only when you do well. That's the foundation.
Exactly, and from that philosophy flows everything we offer, especially our trading packages, which we will be discussing in detail. We will explain the logic behind each one, what kind of traders they ever looked at our package and thought which one is right for me. Today we will answer that.
And more than that, we will also do a live comparisons between packages. We will break down pricing, account size, maximum drawdowns, consistency rule, and even payouts side by side to have you make a fully informed decisions. It's one thing to see numbers on a website, it's another thing to understand the intention behind them.
Right, and when you understand the packages, the next question is always, how do I stay compliant while trading? So we will move naturally into discussing trading rules, which honestly is one of the most important part of today's session. We will explain what the day loss limit is, how it's calculated, why it includes bow and claw and floating profit and loss, and how to avoid violating it, especially overnight. We go into the maximum total loss, the consistency ratio, and we will even address common misunderstanding about trade sizing and recur trade policies.
And we won't just explain rules in isolation, we will explain them in the context of live trading decisions. I will share some personal examples of mistakes I made when I first started trading under funded conditions and how I adjusted. Because rules aren't meant to restrict you, they are there to protect the integrity of your growth.
And while we are on the topic of helping you succeed, we will be guiding you through our current promotion plan, including limited times, discount codes, trader support campaigns, capital opportunities, and how to properly qualify and submit proof. We have had some amazing response to our promotions, but also some confusion. So we will be showing you exactly what to do step by step.
And from there, we transition into a discussion on our scale plans, which I personally think is one of the most underrated part of WeMasterTrade offering. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payout, you actually unlock higher capital tier. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit sharing model. This is the heart of what makes us different from broad firms. When you trade on a funded account and generate profit, without breaking rules. We share the profit with you, up to 90%. But there's more to it than just the percentage. We will explain the full payout circle, threshold, and timeline today.
Now, I know many of you watching today aren't just traders. You are also educators, influencers, or people with large networks. That's why we are also taking time to explain our affiliate program, and we will do it transparently. We will walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanations of the two referee rules and minimum funding conditions.
This is especially important because we want our partner to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the term and building long-term income stream.
So as you can tell, this is not just a surface level live stream. We are we are diving into everything: packages, rules, promos, scale up path, profit sharing, and affiliate opportunity, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have questions at any point, please drop it in the chat. Our moderators are watching and we will answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we will leave timestamp and some right below. You can always reach out to our team with any follow-up inquiry. Our supporting is incredible, and they really care about helping traders succeed.
To wrap up this welcome, I would like to say this: WeMasterTrade is not just a platform, it's a commitment to build real traders, to create fair, structured, and scalable pathways for people around the world who are serious about trading as a profession, not a game. So, if you are here to grow, to understand, and to take action, you are exactly where you need to be. Let's dive into the journey together. Let's begin. And once again, welcome to WeMasterTrade live stream. Thank you once again for being with us today. Now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full picture of who WeMasterTrade really is, what we believe in, and why we have built this platform the ways we have. Because when you are putting your trust and your trading into a company, understanding its philosophy isn't just helpful, it's essential. And so this next segment is about origins, intentions, and impacts. It's about how WeMasterTrade began, what values underpin the firm, and how those values translate into real tools and outcomes for traders like you. And to walk through that, I'm joined as always by two people who live and breathe these principles, Ralph and Helen. Let's start at the beginning.
Thanks, Hayden. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many platforms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital regardless of their background, locations, or financial situation. We were founded in 2022 as part of the WeMasterTrade Group, headquartered in Vancouver, Canada, while WeMasterTrade built its name on signal sharing, investor networks, and copy trading tech. WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to know, WeMasterTrade is not a broker. That's not just a label. It's a fundamental difference. We don't profit from spread or commission. Our success is directly tied to the success of our trader. That's why everything here we have built, from our instant funding packages to our profit sharing model, each structure with alignment in mind. We take on the capital risk, or we will build a roadmap during the skill. But we also know that skill alone isn't enough, which is why one of our funding principles is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure. That's why we invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibrations and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementations. We have designed the curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, what you can apply directly to your funded account. And to ensure that our systems and content meet global standards, WeMasterTrade is proud to hold an ISO 21001 2018 certifications, which confirms that our educational products and traders development programs meet rigorous international criteria for quality, structure, and engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called platforms come and go, WeMasterTrade has positioned itself with real operational stability, compliance framework, and internal accountability. We are not here for a reason, we are here to help build career.
And we have seen that commitment translate into real story. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, and South Africa, all talking about how women to trade help them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with a retail broker. They talk about finally being able to trade without the emotional burden of risking personal fund. And we had a student become full-time trader. We had women enter the finance world after career break. And we had a young professional from underbanked regions finally access the markets with a fund account. That the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog sessions where our team of experts and educators share weekly insight, trading psychology breakdown, market reactions, and platform update. We believe that learning never ends and we keep our traders informed. But let's also talk about culture. What makes WeMasterTrade different isn't just the product offering, it's the community mindset. We actively promote trader integrity, respectful competitions, and knowledge sharing. Whether you are in Telegram group, watching our YouTube series, or engaging with us on live spot, you will see that we actually listen.
And I will speak honestly here, in many platforms, the trader is just a customer. At WeMasterTrade, the trader is the product. Your performance drives the business, your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare and it's something we are proud of.
And if you ever doubt this whether this part is real, whether the trader career truly within reach, I encourage you to read the testimonial, take a look at our funding account, and connect with people who go through the system. The stories are real, the capital is real, and results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. We are here to challenge the status quo of trading assets, to build system that reward performance over promotions, and to create real scalable income opportunities for traders around the world, regardless of their starting point. This more than a proverb is a trading movement, and if you are ready to be a part of it, today's live stream will show you everything you need to know. Thank you, Rap and Helen, to that deep and honest walkthrough. Coming up next, we will going to take these foundations and connect it directly to our actual offering. That means we will be discussing all the different account packages available at WeMasterTrade, how they differ, who they are designed for, and what kind of result you can expect from each. Now that we have explored who WeMasterTrade is and the principle we stand for, it's time to move into one of the most essential parts of this live stream and in-depth discussions on our account packages. This is where it all begins for most traders, choosing a structure that best aligns with their goal, their style, and their current skill level. And when we say packages, we are not just talking about dollar figures, we are talking about frameworks. Each package at WeMasterTrade represents a different pathway toward growth, and today we will walk you through all of them, what they offer, how they are structured, and most importantly, who they are designed for.
Exactly. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we built two distinct products, line for traders, the challenge and the instant funding package. Each line includes a variety of account sizes and configurations because we know that traders come with different strength, risk appetite, and timelines.
And let's begin with the challenge model, a two-phase evaluation system for traders who want to build their skill before being allocated capital. It's structured, fair, and has become the most popular rule for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are three stages in total: phase 1, phase 2, and then the funded stage.
Take for instance our 10K dollar challenges, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
In phase 1, you will need to achieve a 8% profit target, which is $100 without reaching the 5% daily loss or a 10% overall loss limit. You will have a limited time to achieve this. That's a key difference from many profiles. We don't pressure you with deadlines.
When you pass phase 1, you will move to phase 2, where your profit target drops to 6%, that's 600. The risk will remain the same, and here's something unique. In phase 2, your risk starts receiving a 30% profit share if you exceed the target.
Finally, once more phases are clear, you enter the funding account where you trade with real capital, have no profit targets, and your profit share jumps to 90%. That's one of the highest in the industry.
And this is very ideal for newer trader or experienced trader who want to start with lower ratio and learn the system. If you're still refining your strategy and want to get to feel for the WeMasterTrade risk framework before scaling, this is a perfect package to begin with.
Now, for those who are confident in their strategy and want to start with a larger account size, we offer 25K, 50K, and 100K dollar challenges packages. The structure is similar, two phases, the same 5% daily and 10% total loss limits, but the profit targets scale proportionally.
For example, in the 50,000 challenge, you will need to hit 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains the same, 100, giving you room to adjust position sizing.
And from 25,000 to 100,000 challenge are ideal for traders with more capital management experience, especially those looking to the eventually scale into larger funding account. If you already passed all the rough challenges and have a strong verified trading history, this is a good step up.
Every challenges packages comes with a one-time fee. For example, just $45 for the 10K challenges. This fee is refundable once you become funded and meet minimum performance conditions. And if things don't go your way, you are eligible for a 30% reset discount to start fresh. And what if you don't want to go through challenges at all, but instead want to accept real capital immediately and get paid based purely on results? That's where our instant funding packages come into play.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced selling trader the chance to attract real capital from day one. No evaluations, no demo stage, just pure live trading, like structure, fair and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today we are going to walk you through each of the 5 main instant funding packages: standard, 51010, 510 510 OBC, and customized. We will compare the details, but more importantly, we'll have you figure out which package is right for you.
Let me set a scene quickly. All of our instant funding packages give you live trading asset from day one. That means no challenges, face no evaluations. You pay once, follow the rules, and you are trading live capital. And every account, no matter the size, includes no time limits, up to 90% profit share, scale up plan toward $1 million, support for EA, swing trade, scalping, and even HFT. Now let's go package it by packages, and as we go, Rob, Helens, I want you to jump in with real advice. Who should actually choose which one, and what kind of traders you have seen succeed with each?
Okay, first let's start with the standard package. I always describe this one as the best one for traders who just want stability. You are getting to up to $200,000 in capital with a very manageable 4% daily loss limit and 6% overall loss limit.
It's like that scam steady account that doesn't put you to overtrade, and with the profit split up to 90%, that's your earning potential, even if you're taking slow and steady approach.
And how about commissions?
It's competitive across the board. Forex at $4 per lot, gold at $4 per lot, indices at $0.5, and stock at just $0.07 per lot.
And everything it allows, news trading, scalping, weekend holding, EAs, HFT, you name it.
So for the audience, if you are someone who trades regularly, understands your strategy, wants a full range of assets, and plans to play a long game, this is your sweet spot.
And it's perfect for intermediate to advanced trader who already know their ass but don't want to stretch with the target-based challenge. And if you ever had an account due to the unrealistic rule, you will find the standard model refreshingly fair.
I will also say it suits swing traders. The 4-6% risk profile gives just enough flexibility to hold multi-day positions, especially with weekend holding fully allowed.
Alright, moving up a gear, let's talk about the 51010 packages. Same capital ceilings up to 200k, but you now get 5% daily loss and a wider 10% overall limit. Why does that matter?
That education is massive for traders who scale into position or take multiple entries per setup. You got more room to breathe, especially in high volatility markets.
And the profit target is also 10%, which allows well with the risk window. Plus, you still get full support for scaling, EA is new trading, and is very trader friendly.
This is bad for day trader, especially though trading assets like nada or gold that move fast. If you got a tight interest strategy and just miss some regretting room, this is your packet.
And also for traders who want structures but don't mind having their profit target, the clear milestone motivates some people, especially if they are payout oriented.
Now, here is the personal favorite, the 5-10-0. You get 5% daily and 10% overall loss, but no limit, no profit target, none, zero.
And that's a blessing for high precision traders. You are no longer chasing a number. You just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency trader and sniper. You enter from 2 to 5 trades a week. This is well, your space. That's not personalized for patient. You actually reward for it.
So who's it for? Veterans, swing traders, risk-conscious traders, people who prioritize consistency over speed. If that's you, you are try here.
And let's be honest, not everyone wants to hit target. Some just want to trade well and scale up quickly. This is their home.
Now, for the rule breakers, or rather, those who don't want to be evaluated on how even their profits are, the 5-10-10 no PC removes profit consistency tracking, right?
Exactly, it's a 5 or 10 week profile, but you're not required to keep your profits grow smooth.
Let's say trade scabiers are not allowed in this one, so it's for manual traders only. And you need to trade responsibly, but for aggressive traders who sometimes hit big spike, this is the place.
And it's perfect for high risk reward trader or anyone had issue with consistency rule at other firm. You trade how you want, just keep it inside the drawdown box.
And last but not least, the customized packages. This WeMasterTrade saying, you know what you need. Let's build it together.
You can adjust daily loss, overall loss to your liking. Plus, you can fund up to $400,000 more than any other account.
And it's premium, flexible, and comes with all trading style workload, including EAs, news trading, weekend holding, SFT, and more. And a profile for top-tier professional, ex-husband traders, a signal provider, high-volume trader, anyone with a very specific structure in mind. This bucket let you build it.
I always say if you try all the models and nothing quite fixed, build your own blueprint with customize. The freedom is fair.
To sum up, every instant funding packages we offer comes clear risk parameters, fair commissions, deep market access, and real profit potential. There are no time limits, and payouts start as early as 1 day in.
And no matter your strategies, gapping, swings, on-go or manual, there's an account that aligns with you. The key is picking the right one now so you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dream. The right fit always outperform the biggest promise.
Up next, we will walk you through exactly how to protect your account, avoid breaches, and understand the key risk and consistency rules that power our entire platform. Alright traders, now that you have seen the packages, let's talk about the part that either makes or breaks your account. That's right, it's time to dig into the trading rules and how to actually stay compliant once you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number of one reason traders lose their account, it comes down to one thing, the daily loss limit.
Yeah, the traders daily lot. It's the one rule trader think they understand until it's kicked them out of their account at 3:17 p.m. on a random due days.
But here's the good news. Once you understand how it works, really works, it becomes one of your best tools for risk control. So today, let's break it down from top to the bottom.
So, what's the daily loss limit, also called maximum daily loss?
Well, it's the maximum amount of loss you are allowed to incur of both floating and closed trades on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of that trading day. That's a really important distinction and is what triple lots of people up.
Let's walk through a live example. Imagine it's the start of day 5. Your balance is $105,000. Your equity, however, is higher, $107,000 because of open floating profit.
If you are on a 4% daily loss limit, we calculate it of the higher numbers 107,000.
So 4% of 107,000 is around 4,000. That means your equity of for the rate of that day can drop below 202,000, 102,000 and boom, the account is gone.
Right. And I think it's important to point this out. The system isn't waiting for a close, it's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that is.
And now let's reverse it. Say at the start of the day 7, your balance is 100,000, but your equity is 99,000 because your open trade are slightly in loss.
Since balance is higher, we base the 4% on the initial balance of $4,000.
So, so now your equity must stay above $96,000 throughout the day. If it drops to 95 and 999 auto liquidations kicks in. No warning, no margin call.
And what happens if you break it? This a system will send a market order to close all trades. Everything liquidates. Your account is disabled, and you can try again and let you purchase a new packet.
And here's the kicker, the auto close happens when the system detects the threshold was crossed. But due to market fluctuations, your final P&L might look worse than the actual threshold. That's because the system executes closures based on the price leverage at the time of liquidation.
And so even if you only intend to take the 3.9 $3,900 loss, one slippage spike in Go or NAS DIQ and suddenly is $4,200. That's why we say don't ride the edge.
Alright, let's talk about how to avoid violating this rule because this is where Brooke said kick it.
First tip, know your buffer. Never plan trades to take you right up to the edge of your limit. Leave at least 10 to 15% room below the max loss, especially in volatile markets.
Tip 2. Check your equity, not just your balance. I can stress that this most traders stay at their balance all day, but if your floating loss is driving your equity, you're heading toward a violation.
Tip 3. Use the dashboard or tracker inside WeMasterTrade. We provide risk dashboards that show your live loss status. Use them, check them, don't rely on memory.
Also, post trading after a big loss early in the day. If you lost 3% in the first hour of learning sections, maybe it's time to stop and reflect, not try to revenge trade your way back.
Another big one, trade smaller during news hour. If you're trading gold during an appear with a full loss side, you're practically begging to break the daily loss rule because position size and rifle volatility.
What are the top rookie mistakes you see when it comes to daily loss?
Number one, over leveraging. Traders opening positions that are 5, 6% of, or even 7% of their account, thinking they will close quickly. But if the trades turn red fast, it's already too late.
And number 2, holding overnight without checking a brochure. If you hold three trade overnight and wake up to a 60 people up, daily loss could be hit before you even open your eyes.
And the third, assuming that closed trades are all that matter. They are not. Remember, equity includes both floating and closed positions. The total equity line is your score.
And I always say this to new traders, the daily loss rule isn't your enemy. It's your account airbag. It's designed to protect you from doing something irreversible.
Exactly, it forces discipline. You can be aggressive, but only within the box. And if you learn trade inside dashboard, you will last longer than 98% of the market.
And one last note, that this isn't just about rule, it's about trust. We must trade funds you because we trust you that you will manage risk responsibility. The daily loss is there to protect that trust on both sides. And and coming up next, we will move to the max loss. But now we will have a short break.
We copy trade. We copy trade. 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 copy trade. We copy.
Rồi xong đi chị cãi lại cho.
Welcome back, traders. In the previous segment, we covered the daily loss rule, and if you haven't already clicked that one, you are missing out. But now we move forward from the daily boundary to the absolute boundary. I'm talking about the maximum loss rule, also known as your account's stop loss. The line that can be crossed not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstanding how the rules work. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they have chipped away at their account and suddenly liquidation.
And the max loss rule is the last setting as if the daily loss is your daily sit bound, then the max loss is your about. Now, if that limit is hit, it means the account is deemed unflexible under your current trajectory and it close immediately.
So what exactly is the max loss rule? Let's define it simply. It's the total maximum amount you are allowed to lose across all trades for the entire account. If your equity, that is your real-time capital including open trades, if ever drops below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss, which reset every day, this one doesn't reset. It's cumulative. You can lose 2% one day, 3% the next. And if your total loss crosses the line, that's it.
And the percentage limit depends on your pocket. It typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you start with.
Let's walk through the concrete example. Suppose you have an instant funding account with an initial balance for 50%, $50,000, and your max loss limit is 6%, which is $3,000.
That means your equity can never go below $47,000 ever. Doesn't matter if you make $1,000 yesterday, the total loss from your highest point back down to that threshold is what matters.
And remember, this rule includes both low losses and floating losses. If you have a loss at 2,000 in low trade and you have an order of 1,200 floating rate, your equity is now at 46,800. That's below the limit account close.
And just to be clear, it's not about the net gain or loss across trades. It's about where your equity stands in real time relative to that stop loss floor.
Here's where it gets interesting and a little tricky. Let's say your account grows to 51,000. Congrats, you are in profit.
But the max loss limit is still beyond your original 50,000 starting balance. So if your limit is 6%, the threshold is still 47,000. Question is how much room you have to fall before you hit it.
Exactly. You now have $4,000 in total buffer because 51,000 minus 47,000 equal $4,000. So your profit gives you cushions, but the floor never moves.
And what happens when you break it? When your equity drop below that maximum loss threshold, even by a few dollars, auto liquidation trigger or trade are closed immediately at the market price.
And again, like with the daily loss, if there's volatility or slippage, your account might close out below that line. That's just execution reality.
And most importantly, once it breaches, that account is permanently disabled. You will need to purchase a new packages if you want to continue trading. No resets, no rollbacks.
And there are some tips to stay within the market loss rule. Like as tactical, how do you actually trade inside this rule without consistently worrying about it?
First, track your total close losses every day. You should always know how close you are to your max loss floor. Don't wait for the dashboard warning, calculate it manually.
Second, use your profit as protection, not permission. Don't just floating profit at a green light to instantly reach. Instead, consider locking in then by reducing loss size when you're ahead.
Third, manage your floating loss aggressively. Even if you are positive overall, a single trade with a poor stop placement can take you from safety to shutdown in a few minutes.
4. Stay cool when you are close. If you are down 5% out of your 6% limit, that is not the time to double down. That's the time to step away, pause, and retain your entries.
The biggest mistake is underestimating floating drawdown. Trader flow 3 loser and think, okay, I still got room, but forget about 4 trade floating minus 1,800.
Second, traders who chase recovery after a bad day, they lose 4% in one day, come back swinging the next day thinking they will make it back, and instead take another 2%. Boom, violation.
Third, and this one hurts, ignoring slippage during major news, even with a tight stop. News candles can gap you straight through your limit.
The max loss rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal or institutional, as a non-negotiable boundary.
Right, it's a reality check. If you're consistently brushing up against your mark loss, the problem isn't the rule, the problem is your system or your psychology.
At WeMasterTrade, we are not just giving capital, we are teaching structure, and the max lot rule is what separates gamblers from professionals. So remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance. It includes both closed and floating losses. And one branches, your account is gone. Coming up next, we will explore the consistency rule and why steady profit matters more than big spikes when it comes to growing, scaling, and getting paid.
And if you ever make 5,000 in one day and then make 200 the next 40 and wonder why your payout got flattened, the next segment is for you.
Let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
Alright traders, we have talked about the daily loss limit, and we have just covered the maximum loss rule, two pillars of protecting your capital. But now is the time to shift gears just a little and talk not about risk but about results. Because here's the thing, It's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you need more than just a winning day. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spike from a reliable traders. It tells us whether you can make money over time or if you are just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader eligible for withdrawal, profit sharing, even scale up. So if you're funny and you're wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. The less consistent, meaning you had one giant profit day and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profit came from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit day by day, even if it's small. That's what we can scale.
And how it is calculated. The formula is really straightforward. Take your the bad trading day profit and divide by your overall profit since you start your account, then multiply by 100.
Best day divide total profit multiple 100 equal to profit consistency percentage.
And just to be clear, best day refers to your highest close profit in a single calendar day, and total profit is the sum of all your close profit minus any close losses or open losses across the life of the account.
And let's say you had the following result over 5 trading days. Day 1 at 100, day 2 200, day 3 minus 50, day 4 100, and day 5 60.
That means your total net profit across 5 days is 100 at 200 plus minus 50 plus 100 plus 60 equal to $410.
And your best day was day 2, that's $200 profit.
So now we apply the formula 200 divided 410 equal to 0.4878. Multiply that by 100 and you get profit consistency ratio of 48.78%.
Now, let's say your account requires 20% profit consistency, which is common. This trader is way above that, so they wouldn't qualify for a payout yet.
So even though this trader is profitable, they are not consistent enough. They had one big day that made up almost half of their total profit. That's not sustainable, and that's what we are looking at.
And this is where I really want to speak to traders. If you are relying on one or two big days to carry your entire account, that's not professional trading. That's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are the one who get scale up, who get a feeder, who get trust with more capital.
Alright, so let's address the number. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your bad day should not exceed 20% of your overall profits. And how to improve your consistency? Let's say you're over the limits. Don't panic. You did not qualify. You just need to keep trading even out the curve.
So here's how to do that. First, trade smaller size for a few days. Secondly, take smaller control wins, aim for $200 to $300 days. Avoid big swing trades that could spike your ratio again. And lastly, spread profit across multiple days, not one monster setup.
And for those using EIs, monitor your equity curves. If your EI is skewing profits heavily into one day, you might need to rebalance it. The bot might be profitable, but it won't pass this rule unless it's configured with payout logic in mind.
And there are some common mistakes to avoid. Mistake 1. Trader hits target early, then taking the rest of reserve. That's inflate your bad day and leave the rest of your curve flat.
Mistake 2. Overtrading after a big day, thinking I'm safe now, and trying to squeeze more instead of averaging out the high ratio.
Mistake 3. Thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master traders.
So why this rule matters? At the end of the day, this isn't about controlling you. It's about building habits that can handle scale. If you can't be consistent with $25,000, what happens when we give you $100,000 or more?
Exactly, consistency is what makes you stay in betting. And WeMasterTrade, we're fun trader, but we also study them. This rule tells us whether you're serious about long-term trading.
And we have seen that it and times again. The traders who respect this rule, they are the ones who get multiple payouts, referrals, and grow into six-figure funded accounts.
So don't fear the rule, understand it, use it as a feedback tool. If your ratio too high, right, that means you got profit. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculate your profit consistency ratio automatically. You can check it anytime under your statistics tab.
To recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress in the dashboard. We have walked through the daily loss limit, checked the maximum loss account loss, and examined how your profit consistency shape your long-term payout and growth. And now we arrive at the final and perhaps most overlooked rule of all, the risk consistency rule, or what we call the discipline test.
That's right. Traders often think the biggest enemy is the market, but truthfully it's inconsistent, especially in how much you are risking from one trade to the next.
This rule doesn't look at how often you win, it's look at how stable you risk and how professionally you managing your position sizing. And if you're sure about the scaling at WeMasterTrade, this rule is non-negotiable.
Let's break it down. At its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes on losses associated with that trade idea, low closed losses and floating losses. Even fees, commissions, and swap are counted.
And for some account like the 510 no PC package, this rule got even stricter. There the limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity becomes, and thus make you hard to scale.
This rule protects both you and the firm. It helps preserve capital, prevent large equity swings, and make sure your edge play out over time.
Take a look at your account heart rate. If your position size pull up and down at 0.5 loss one day, 5 loss the next, the system flattened, not structured as cowl.
This where it gets technical, but stay with us. The term trade idea isn't just one order, it's a group of trades that shape and that share the same logic.
If you open three buy positions on AUUSD Go at different times, that's the one trade idea.
Because it's the same symbol, same direction, and glow around the same time. If you even open them at different times, they sit at a single and 5 position from brick per pattern.
So the system doesn't look at your trades in isolation. It groups them into logical bundles and applies the 2% rule across the entire bundle.
So what is allowed? You can have multiple separate trade ideas as long as each one respects the risk limit.
For example, if you go long on gold, short on by GTB, JPY, and short on AUD USD, and each position had its own distinct direction and asset, there are three separate trade ideas, and each one can reach up to 2%.
Let's say you go buy on go and then you go buy again and again. You now have three open positions in the same direction on the same asset.
Yeah, the system treats that as one trade idea. So if the combined floating bridge or eventual loss from the position is 2% of your starting balance, boom, you've broken the rule.
Let's go hand on. Suppose you have a $100,000 account. The 2% max risk per trade idea means you can lose more than $2,000 on any trade idea total.
So you open two go buys, one lot each. You don't place a stop loss, no hits. Market drop 100 pips. Each lot loses $1,000. That's 2,000 total.
Oh, you're right on the line. It's liberal or swap as a few extra dollar. That's it. Rule broken, account of flashes, liquidated depending on enforcement model.
And on some accounts, especially accounts with stricter tolerance, this branch may result in loss of funded status or immediate closure.
And there are some tips to stay consistent. Tips 1. Set your loss sign based on your coverage, not emotion. Know how many pip equal 2%.
Tip 2. Use stop loss order religiously. Set them based on risk or trade idea, not random chart levels.
Tip 3. Don't stack trades without calculating combined risk. Just because one position is below 2% doesn't mean three of them are.
Tip 4. Label your trade idea mentally. If you're entering on the same server, treat it as one, sign accordingly.
Tip 5. If you want to split an idea into multiple entries, do it smart. Scale in smaller. Use micro loss if needed. Keep the total exposure below 2%.
And the most common reason traders break this rule is stacking multiple entries as one trader thinking is still separate.
Second, opening high-risk trades after wins, assuming they are playing with house money. Spoiler, the market doesn't care.
Third, neglecting floating loss. A trade may not be closed, but the floating rate still counts toward your 2% risk.
So why we enforce this rule? This isn't just policy, this is professional practice. Hedge funds follow this, banks follow this, real traders follow this.
Exactly. We're not here to micromanage you. We're here to protect your account, your capital, and integrity of this community.
And traders who internalize this rule, who understand that small, consistent risk is the foundation of scalable capital, those are the ones who we grow. Those are the traders who go from $25K to $1 million.
If you want to be a professional trader, you have to think like one. And professional traders always know how much they are risking on every trade every day.
And if you are still guessing your lot size or opening trade because you set up feel right, take this at your side, set it up, get global.
This more than a rule is a habit. Use it now and the path to bigger capital and larger payout become way more predictable. And that, my friends, wrap up the 4 essential rules of trading at WeMasterTrade. Daily loss, maximum loss, profit consistency, risk consistency. Master this and you are not just staying compliant. You are building a foundation for serious capital management, long-term payout and scaling. You are watching the official WeMasterTrade live stream and the best is still to come. So now we will move to the economic calendar.
So hey everyone, welcome back to our live market watch. It's Thursday, October 16, and we got a mix of high impact events today, especially for the Aussie dollar, the pound, and later on the US dollar and euro. Helen, let's kick things off with what happened in Australia this morning.
Sure, Rob. Australia definitely start with the day on the Dow Jones. We had employment trends coming at just 14.9K, missing the forecast of 20.5K, and even though it's better than last month minus 11.9K, it still saw the job market even recovering as strongly as expected.
Exactly, and on top of that, the unemployment rate ticked up to 4.5%, higher than the expected 4.3%. So both labor indicators came in weaker. That's why the Aussie dollar dropped right after the release. Traders are now speculating the RBA may take a more cautious turn moving forward.
Right, and speaking of the RBAs, um, earlier at 2:45 a.m., Governor Bullock's gave speak. She mentioned that's why inflation is and central bank remain resilient. That's a clear signal with the RBA isn't ready to cut rates yet, and they are also aware of slower job growth.
Good point. Now, moving to the UK, we have GDP month over month at 0.1%, which matched forecast but is a slowdown from last month's minus 0.1%. So technically it's a slight improvement, but nothing impressive. The British economy is still showing very modest growth.
Yeah, and the market reaction were quite mild. CTP pairs stayed at the high range after the data. Traders are likely waiting for more clarity from the next week inflation and retail figure.
Now, let's fast forward to the US session later today. We will have the Philly Fed Manufacturing Index at half past 7 p.m., expected to come in at 8.6, down sharply from the previous 23.2. If this number disappoints again, it could weigh on the US dollar or at least raise more questions about manufacturing health.
Then at 8 p.m., FOMC member Wallace will speak. Waller now to be at the hallway side, and Sojourner will be listening to for any hints about how long the Fed plan to keep rate elevated. If his tone is firm, we might see some short-term dollar strength.
And wrapping up the day at 11 p.m., ECB President Lagarde will deliver a speech. With the Eurozone struggling with weak growth and inflation nearing target, markets are expecting a dovish turn that could put some pressure on the euro today.
Yeah, so overall today we have got AUD under pressure from weak job data, GDP steady but short with flat GDP growth, USD waiting for the Fed and manufacturing update, and EU are likely to react later during largest comment.
Exactly, a quiet start, but things could heat up later during the New York and European evening sessions, so traders, keep your eyes on the US dollar volatility window tonight.
Well said, that's all for today. A quick breakdown. Stay sharp, manage your risks, and we will see you in the next update.
So that's the end of our live stream for today. Remember to like, share, and follow of the WeMasterTrade. So see you for the next week.
We copy trade.